This is the very first time and a privilege for me because I have an opportunity to share the updates on Diagnostyka and our performance. This is of key importance because it's related to the events at the Diagnostyka group throughout 2024, which was a very solid year for our company, for our group. You have already had an opportunity to go through our data for the 3 quarters year to date, and those quarters were also solid for the group. But we also presented a lot of forecasts and projections from the analysts and from our side as well, because at the turn of 2024, 2025, we decided to go public and get listed on the Warsaw Stock Exchange. The comparison between our projections and the analysts' forecasts is that we are faring even better than we expected after the first 3 quarters. Our growth trajectory is continued. We expected the growth at 25 million patients, but the volume of tests exceeded 160 million. To be more specific, 161.3 million in terms of diagnostic tests volume. Our revenue from operations are just short of 2 billion PLN, going up by 23.6% year-on-year. We were therefore very close to a solid 2 billion net profit, which was attributable to owners of the parent, that is Diagnostyka S.A., joint stock company, was comparable to our overall profit across the group, because only in a couple of smaller companies we have minority interests. We're talking about the total of 223.3 million PLN, going up by around 80% year-on-year. And last but not least, we have a ratio that is sometimes regarded as the most important ratio or indicator, that's recurring EBITDA. In this particular case, we exceeded 500 million PLN, more specifically 508.7 million, having increased by almost 33% year-on-year. We'll take a deeper dive into our financials in the second part of the presentation. It will be discussed by our CFO. I will now move on to discuss more operational side. So what happened throughout 2024? We continued the expansion of our core business, that is the for instance, opening of a new regional laboratory in Łódź. We opened a brand new building of this laboratory, which will house both typical laboratory diagnostics, but also Poland's largest anatomical pathology or pathomorphology laboratory. In terms of what we do in terms of cytology, especially gynecological cytology, we opened the brand new state-of-the-art laboratory in Warsaw. So far, those laboratories were located in Kraków, mainly in Łódź, at the pathomorphology facility, but we decided to open a brand new, fully automated facility in Warsaw as well. Abbott lines were also launched in Kraków. The new line was launched in Kraków, which means that we moved from Roche line to Abbott line, and we also completed the investment, which was meant to fully automate diagnostics in Kraków, raising the bar to meet the highest world-class standard, just as before, a year before in Warsaw. We are implementing new specialist diagnostic tests all the way, genetic, but also other tests. For instance, one of the more memorable examples is the ELISA-based test for Alzheimer's diagnostics. In the latter part of the year, in November, within just 4 months, we launched and created and launched the new Diagnostika mobile app, which allows you to browse your test results on your personal app easily, and also gives you an opportunity to order tests and get to the closest collection point. Other IT-related events, as I said during the roadshow, because as I said before, it's one of the key issues for us. We signed an agreement that will be launched next year as of 1st of January, SAP Capgemini, and we are at the very advanced stage of deployment of the system. It will help us as a big, large-scale group to operate very professionally and to be managed very effectively. This is the feature that we are talking about already today, but thanks to that, in the future, we will move towards data-driven organization even further. This year, we completed the TME implementation. We started with the implementation of TETA last year. This is an automatization of HR processes across our organization. We are keeping up with the pace of our M&As, 10 acquisitions to date last year in terms of both standard laboratory diagnostics, but also 4 new acquisitions in the area of medical imaging. We also opened 2 new greenfields for medical imaging in Warsaw and in Bielsko-Biała. Last but not least, something that is an apple in my eye, personally speaking, and it will give us a good starting point for our future growth. That is Longevity Plus project. This is something that we talked about before in terms of our diagnostics operations, but we are focusing more and more in terms of healthcare prevention, so preventive healthcare. This is why we opened the very first comprehensive diagnostics center in Warsaw at 100 Jutrzenka Street in Warsaw, and we welcomed our first customers in January 2025. This is what we call the Longevity Clinic. And again, 2024 was a year when we prepared ourselves to go public, and we successfully have in the end. We believe that our going public was very professional, and our investors, the ones that I'm talking to right now, should be very satisfied with it. And thank you for the trust you have placed in us. The next slide presents the data related to our IPO. 14 years ago, Diagnostyka and Mid-Europa partners agreed that we probably will not be selling, that they'd not be selling the minority interest, the interest that they held. For the 14 years, we enabled Mid-Europa partners to earn a lot, and the issue price of our shares was set at 105 PLN. Therefore, we also made it available, made it possible for our new investors to earn a lot as well. So the company's stock was valued at PLN 130, an increase of around 24% on the issue price. At IPO value was at PLN 1.7 billion, but the market cap at the issue price was at 3.5 billion. Today, we're talking about the value, the market cap of almost 5 billion. So our stock exceeded, the price of our stock exceeded 150 per share. Reduction of subscription and for retail investors was at more than 94% due to oversubscription. So the retail investor book was covered eightfold. In terms of large investors, it was covered eightfold. The total turnover because we are also talking about not only about registered shares, but also non-registered shares. We're talking about the free float of 52.8%. We ourselves, as the founders, we did not sell any shares. We do not intend to either. We want this company to position itself as a dividend paying, but also a growing company. It is no secret, we have talked about it before, that we proposed as the management board a 50% dividend, 50% on our net result to be paid at this year. These are the key highlights I wanted to share with you operationally. So moving on to the next slide, where we start talking about our financials in more detail. Paweł Chytła, our CFO, will take over the floor. Thank you, Paweł, for putting us on a Warsaw Stock Exchange so successfully, and for your very hard work, for your effort, because your effort as a CFO was enormous in comparison to mine as a CEO. So Paweł, please continue with the presentation. Thank you, Jakub. I have the pleasure of discussing our financial performance for FY 2024 across the Diagnostyka Group. We are continuing our consistent and dynamic growth. Our dynamics in 2024, our revenue from contracts with customers was at 24%. At the same time, we generated record-breaking revenue at 1.950 million. So that's 1.9 billion. Obviously, our total operational revenue was more than, or actually was close to 2 billion. Therefore, we can talk about consistent growth dynamics, and the compound annual growth rate was at 23%. Our sales in 2024 were generated mainly organically, because out of the 2023 growth in sales, it was mainly due to our organic growth in the laboratory business. And therefore, we are continuing with our organic growth just as we did in previous years. Adding to what Jakub mentioned at the beginning. In terms of our key drivers for our growth in revenue from sales, we are also talking about an almost 15% growth in volumes. This is a record-breaking growth in volumes. And the demographics and the demand, the trends in our customer group, and the customer sentiment and the willingness to get tested are our main drivers. But also, we also had an increase in our average price of tests, doubled the inflation year on year. On the one hand, we wanted to catch up with the pace of growth after the inflation of 2023, but also the mix of our product played a great role here. We are dynamically increasing the share of specialist tests in our portfolio and the share of morphological and genetic tests is also going up. This will be continued in the periods to come. In terms of the breakdowns between B2B and B2C channels, these channels increase dynamically head in head with the dynamics of 23%, and the share in revenue remains the same, around 40 to 60%. In the context of our operating expenses, we managed to generate a clear and visible operating leverage effect. Operating expenses went up by 20% year on year compared to the growth in revenue at 23%. In the lower part of the slide in the table, you can see that in terms of volume, by cost type, we talk about employee benefits expense and its share, which was the highest. However, it went down to 38.5% from 39%. So actually all costs went down in terms of their share, which added to an increase in EBITDA, which I'll talk about later. Cost of services, third-party services went up slightly, which was due to higher purchases of medical services, so B2B contracts from diagnostic specialists, but also doctors, pathomorphologists. And this was coupled with higher B2B spending in terms of IT experts. But talking about operating expenses, we see a clear, a visible operating leverage effect. This was the main driver of this huge or considerable EBITDA increase to 26% in 2024 from 24 in 2023. We're talking about an increase of 32%. So we're talking about an absolute value of 508 million PLN. In terms of the breakdown of our financial result by quarter, we can see quite clearly that the diagnostics business is immune to the economic cycle, the economic dynamics. So both the revenue and the result can be broken down quite uniformly by quarter. Obviously, we have small differences, but in terms of the entire group, they're not very significant. Quarter four actually surprised us a little bit with better results, but in general, our performance throughout the year, both in terms of the guidance that we showed during the IPO, where we expected that our revenue will increase with a mid-low 20s dynamics. So 23% is in line with the guidance that we talked about. EBITDA went up a little bit, but this is not a spectacular surplus. So I believe that we are proceeding as planned. In 2024, we saw a very high increase in our net profit, 81%. So the main contributor here, we are talking about a huge recurring EBITDA surplus, plus 32% year on year. This translates into net profit increase. In 2024, it went up to 100 million PLN. Obviously, one-off expenses that we saw in 2024 were related to the IPO process, as well as the manager's share or stock program. This was also related to the IPO. Depreciation and amortization has a very low contribution to the increase of the growth of our revenue. Diagnostyka has a solid, established asset base, and we did not increase it significantly. Therefore, the amortization and depreciation cost did not, or expense did not increase, and we were able to report a solid EBITDA growth and by extension, a solid growth in net profit. Obviously, we saw a significant contribution in terms of revenue and finance revenue and finance income and finance cost. However, our borrowings, our IRSs are covered in around 30%. In 2023, it was a negative value. It was in the red. Therefore, we can be happy because we see that in 2024 the tide has turned. So IRSs were valued positively in 2024, and therefore the balance between finance expenses and finance income is positive in 2024 versus 2023. Obviously, income taxes need to be paid, and we're paying our taxes. We'll keep paying them. This is part of the business. In 2023, we had a write-down, recognized a write-down on one of our associates based on an equity method, but this will not be continued in 2024. 2025. So we had a positive, a one-off effect year on year. So these were the main elements, the main drivers behind our significant increase in net profit year on year, and we are able to pay a high dividend based on that. I'll talk about it later on. In 2024, we have generated robust cash flows. Our cash flow indicators are over 80%, 85% more specifically. Free cash flow went up by 90 million PLN year on year, and this allowed us to introduce great investments, or have good investments. Our CapEx was at more than 230 million PLN in 2024. In line with the guidance that we presented during the IPO process, we spent around 100 million PLN on M&As. I will discuss it later on, and around 130 million on operational CapEx. Main spending here included a construction of a laboratory, as Jakub has mentioned before. In 2024, we built a big regional laboratory in Łódź, which cost us around 50 million PLN, and we also started a construction of a laboratory in Bydgoszcz. We are continuing this project. We also invested in renovations, upgrades, and other elements of maintenance CapEx. Around 30 million is what we invested in IT. This was communicated as well, so no surprises here. The strong cash flow at nearly free cash flow allows us to recommend a high dividend. In 2024, we paid the dividend of 105.7 million PLN out of the 2023 profit. And in terms of 2024, the recommended dividend, the management board recommendation, is at 141 million PLN per share. That is around 50% of the group's net profit attributable to the parents' shareholders, the majority shareholders. This was approved by the supervisory board. So we're waiting for the corporate approvals from the general meeting of shareholders. Coming back to M&As in 2024, just as Kuba mentioned, we had 10 M&As, 6 in our laboratory business. We are continuing our well-tested, tried and tested strategy in the market. We are buying small laboratory businesses, and this is why we spent 15 million on M&A in laboratory diagnostics market in 2024. But we also turned to another market segment, and we are gathering pace here. I'm talking about medical imaging services. We spent 39.5 million PLN on M&A CapEx, so new acquisitions, and we also added the acquisition of Diagnostyka Wyrobek and LiveMed, they will be consolidated in 2025. And we spent 44.6 million on that. Coming back to our cash flow, a couple of words of explanation. Why did we generate such strong cash flow? Free cash flow is over 80%. This is a very high, even for a diagnostic business. This comes from the fact that the taxes that we pay, this represents only 30% of our revenue. So this business is not very capital intensive. We are keeping low stock. We are keeping our spending under control. So a change of working capital year on year is only 1%. In terms of our capex, total capex is at around 12%, comparable to 2023. So this high cash flow, if we deduct capex spending, allows us to cover all our spending related to leases, rentals, in terms of vehicles, machinery, premises. So we're talking about this type of spending. Obviously, we are servicing our debt. We're talking about 40 million PLN here. In terms of cash flow, we also have an effect of around 40 million PLN of our borrowings, bank loans. This comes from our overdrafts, the overdraft facilities that we have. And as I mentioned, we paid out dividends to our shareholders at around 106 million PLN. As a result, our cash was across the group was at a very safe level. We're talking about cash at the end of period of 40 million PLN. We have very high free credit limits, so we have very flexible products. We're talking about around 150 million PLN, which will allow us to act flexibly and to invest in acquisitions in the medical imaging segment and to consolidate this market. And this puts us in a very safe position in terms of our cash flows. The last slide in terms of net debt to EBITDA, we are keeping it comparable to previous years. So 2024 was closed at 1.8. In the guidance during IPO, we expected 1.9, so this is no surprise again. We are a little bit higher in terms of net debt itself. We're talking about 930 million PLN, but this level at the end of the year is usually a little bit higher, but it went down currently. So net debt to EBITDA is under control, and no surprises here either. Last slide. In terms of my contribution to this presentation, a couple of words about QA in 2025 and our growth prospects and trajectories in 2025. In Q1, we saw no surprises as well. So we had an expected budget performance in line with our projections. We feel comfortable in terms of our performance based on what we presented in guidance during the IPO. So Q1, we'll see continuation of our strong growth in terms of our average price, compounded with an increase in volumes. But I'd like to point out that we are not talking about drastic hikes or increases. We will react if necessary, but we are talking about an increase in an average price. And this is impacted by a positive increase of our product mix, and this will have an impact, an even greater impact in 2025, because we'll start consolidating the medical imaging business. And this is where we see very high prices of CT scans or MRIs and so on. So an improvement on our product mix will even further increase our average price. We are continuing our acquisitions in the medical imaging services segment. We acquired the aerodiagnostic business in April. We have planned other acquisitions in the months to come. So they are in the pipeline, and therefore we can expect 1.8 to 2 in 2025 in terms of our net debt to EBITDA ratio. In terms of our forecast 2025 CapEx, we will be in line with the group's expectations based on what we discussed at the IPO. We are planning to spend around 150 million PLN for growth and obviously for M&As as well. So this would be all in terms of my presentation. Thank you very much for listening. And we, I believe, are able to now to move on to a Q&A session. So we have the first question on the revenue. Q4 was the strongest quarter in terms of your revenue in 2024. So there's a question, what caught you by surprise in terms of Q4 in terms of revenue? We look at the entire year. We are in line with the guidance, ideally in line with the guidance. We expected mid-low 20s, and our dynamics in terms of revenue from contracts with customers is at 23%. So we are in accordance with the guidelines. Q4 was a continuation of the previous increases in terms of prices and also increases in volumes. There were differences between the channels, obviously, but in general, B2C grew a little bit higher in terms of the prices in comparison with B2B, but in terms of volumes, it was the other way around. B2B outpaced B2C. Overall, the dynamics for both B2B and B2C did not catch us by surprise at all. So the channels, I would say, grew in parallel. From the business perspective, I'd like to point out that the government is announcing at the close of the 40+ program, and we expected that this program would be closed before Easter. We launched a promotional campaign with bots. So we saw a strong increase in sales, and we continued it for the 3 months of the year. And we're continuing it in April as well. But the program will probably be changed, and probably this will be the decision was already made, and we changed to 20+. But in general, this had a positive impact on our sales because people thought that this particular program, 40+ program, would be closed by the end of the year. And this was one of the main drivers behind the dynamics between B2B and B2C growth. Next question concerns the retention of your customers. So will the increases in test prices, could they be a scare-off for the customers? Well, this was due to inflation, obviously, and this was a positive thing for us because if you look at our competitors, they are not profitable, or they are moderately, so to speak, profitable, but they implemented similar price increases. So in line with the guidelines, the guidance during the IPO, we did not plan drastic increases. We want to keep up with the inflation rate, and the competition tries to keep up with us. As you know, we are very flexible in terms of our prices and changes in prices. We see no threats in this particular area, and we believe that our market image, our quality will keep us on the safe side, and we see no threats here. In which quarter did you recognize one-off profit based on the acquisition of LiveMed? And I cannot call it a one-off profit. This is not a one-off situation. Every single time for the past 20 years, almost 20 years, we consolidate the market. So whenever we acquire a business in the market, we recognize its goodwill in the balance sheet. When we buy shares When we buy interest, equity interest in a business, we need to consolidate the goodwill. So this is not a one-off situation. This is a normal operation of a company such as ours. They were probably reported as one-offs, but this is related to our business in terms of our M&A efforts. Another question on Q4, what was the breakdown of volumes in terms of tests between B2B and B2C? The breakdown by volume is at about 85 to 15%. A question on CapEx, which exceeded 130 million versus 150 that was planned before. Any comment on that and any prospects for 2025? As I said before, in terms of M&A CapEx, we spent 100 million PLN, just as we expected in our IPO guidance. But we communicated 150, we spent 130, so we're talking about a difference of 20 million. These are the differences and the shifts related to the opening of new collection points, the opening of those new facilities, but also some renovation work and upgrades. I believe that in 2025, we will be in line with the guidance. Another question on M&As. What could be the multiplicators of the planned acquisitions? Do you plan any larger acquisitions which could be potentially financed by debt or by the issue of new shares? Right now, we're not looking at any big business. We are negotiating with smaller or mid-sized companies in terms of medical imaging segment. We do not plan any issue of new bonds or any new stock. We have available financing sources, and we have a very strong cash flow, which will enable us to proceed with those acquisitions. But anything is possible. Really, what's good for the company, we do not close this possibility. How many acquisitions do you plan in 2025 in medical imaging or imaging and diagnostics? Around 10. Could be lower in terms of absolute numbers. I'm not sure if we are able to have 10 projects. They are large scale projects, so maybe the number would be lower, but we are discussing it with that particular number of businesses, 10 or even more. We have another question on the positive effect on operating leverage the CFO has discussed. Will it be continued in 2025? This is something we would wish for, but logically speaking, I do hope that will be continued, but I don't think that this contribution will not be that spectacular as in 2024. So we will not see such a strong increase in profitability, but we have capacity. We have automation projects going on in our laboratories, and the increase in volumes in terms of the tests, the number of tests will be higher than increase in our employee-related spending. So I do expect a continuing increase in terms of the operating leverage effect, but not that high. The expected transactions in the expected number of transactions will probably be comparable to last year's. Another question on the strategy on the management in terms of the number of collection points in mid and short term. We have a conservative approach. We believe that the number of sample or specimen collection points throughout Poland is sufficient as we speak. However, we plan to increase it because of the competition, and we are planning to improve their quality, especially in terms of customer experience. This is our goal. As far as I remember, Pavel, correct me if I'm wrong, we want to increase the number of around 50% per year. So we are talking about 1,100 right now. We're thinking about 1,300 as a target number. So nothing new happened here versus the issue of prospectus. Another question on costs and spending. The cost of materials went down year on year in Q4. So do you see any room for savings in this line in 2025? I'm not sure what this number actually looked like. We're talking about large capex in terms of devices that we use in imaging diagnostics. The prices are stable in terms of material prices. I don't believe they would drop. Maybe in the mix in general, yes, we were able to have an improvement. Pavel, any comment on that? We operate based on contracts. We buy our materials based on fixed prices. So I believe that the product mix was a contributor here. Last two questions, because we're pressed for time. First question, aren't you afraid of local or foreign competitors that can actually be a threat to you in Poland? No, we're not afraid of any competition. No. Last question. Q4 did not see any signs of slowdown in terms of your growth trajectory. Do you see any signs of a slowdown in terms of your growth in the first quarter? What are your prospects for the entire 2025? No, we see no signs of slowdown, not at all. As we said before, and as we see, we are growing. We will not make any spectacular breakthrough movements, but we will continue to press forward. And we believe that we are a stable growth company. Obviously, this growth will slow down over the years to come, but because we will add imaging diagnostics, but it can turn out that in terms of M&As, we will catch up. So the laboratory diagnostics will rise, but not as spectacularly. Thank you very much for your participation in this conference call. If you have any other questions, please contact our investor relations. Thank you very much for your attention.